Welcome to Your Money Guides, brought to you by Interface Financial Planning. Hello. Today I want to talk to you about how it's time to review your will. Is your will as tax efficient as it could be? In light of recent inheritance tax changes, you should consider reviewing your arrangements to make sure you are making full use of your nil rate bands, potentially saving your family thousands of pounds. From the 6th of April 2017, a new form of nil rate band was introduced to take the family home out of inheritance tax. This new nil rate band is known as Residence Nil Rate Band, or RNRB. As special requirements must be met for an RNRB to be available for your estate, you should consider reviewing your will immediately to make sure you are making the best of the new tax rules. So what is the RNRB? Before the 6th of April 2017, everyone had a nil rate band of £325,000. This was the amount they could give on their death before inheritance tax was payable. Married couples and civil partners had an extra advantage and may leave everything to their spouse or civil partner without using their NRB or paying inheritance tax. On the second spouse's death, they will have their own NRB of £325,000, as well as their spouse's NRB, which may be transferred. So spouses and civil partners could give a maximum of £650,000 inheritance tax free. The RNRB is a nil rate band which is in addition to the NRB that I've just described. In the year of 2020-2021, it's £175,000 per person, and it will increase in line with the CPI, or the Consumer Price Index, from 2021 to 2022 onwards. Any unused nil rate band will be able to be transferred to a surviving spouse or civil partner. The additional nil rate band will also be available when a person downsizes or ceases to own a home on or after the 8th of July 2015, and assets of an equivalent value up to the value of the additional nil rate band are passed on death to direct descendants. The RNRB means that for a couple with a home valued at up to £1 million can be passed to their children free of inheritance tax. However, this does depend on the terms of your will, and this may be the time to review it. Not everyone will qualify for an RNRB. For the RNRB to be available, a person must own a residence or a share in a residence that has been lived in by them at some point while they owned it. This residence must be inherited by their direct descendants. Direct descendants include your children, stepchildren, grandchildren, and remoter issue, adopted children, children that you have been appointed special guardian of, and foster children. The residence must be inherited by the descendants absolutely, i.e. gifted to them directly, or it must have been left to them on certain types of trust. The types of trust that qualify are trusts where the descendant is treated as though they own the property, for example, a life interest trust. If the residence is left to your descendants on a discretionary trust, then the RNRB will not be available. If your will contains discretionary trusts, then you should consider reviewing this. If your will includes a nil rate band discretionary trust, then you may need to review your arrangements to make sure you have a tax efficient will. A nil rate band discretionary trust is a form of trust that will take assets up to the value of one NRB, which is £325,000. This was a common arrangement between spouses and civil partners prior to 2007, where the NRB could not be transferred on the surviving spouse's death, because it allowed the first to die to use their NRB. Since October 2007, a spouse or civil partner's NRB has been transferable, meaning this type of arrangement is less tax effective than it used to be. There are still other reasons for using this type of trust, so seek professional advice on whether yours is still required. Some other reasons you might review your will include changes in tax law, the introduction of the residential nil rate band, a birth of a child or grandchild, a change of address, a change of executors or trustees, a marriage, a divorce, receiving an inheritance, and any other material change in circumstances. However, you should always review your will every 3 to 5 years, and always store it safely. Thank you for listening. For more information, visit our website at interfacefinancialplanning.co.uk.